And talking about FMCG itself, the index is at the high point. We have Marico. I spoke to the management and started on asking about their food portfolio and how they're targeting growth in their overall business in the very near and the medium term as well. Let's hear out what Saugata Gupta had to say.
We started, if you look at our Saffola journey, it was towards making a heart-healthy India. And then I think the entire Saffola journey has been on designing better for you foods. Better for you foods means, if we look at it, having healthier grains like oats and millets instead of maida, not having any palm oil in most of the formulations we develop. At the same time, having a balance this one. And we also have two other brands in our portfolio today, which is Plix and True Elements. True Elements, again, is a brand which is free from all nasties. It is in breakfast cereals. It's in, nut seeds. Plix is in the area of nutraceuticals. And I think nutraceuticals is something which we believe is a very, very high potential category in India. I think one of the tasks, of course, is to make it much more affordable and available as a category. And if you look at nutraceuticals, it can cover the entire gamut of weight management, heart health, diabetes, bone health, gut health, stress and sleep. And I think that is something which, if you really look at it, is something which will, as a category, it will certainly has huge potential to grow. At the same time, of course, fortification, whether a fortification with vitamin, fortification with minerals, fortification with omega-3 and others in our core categories is a continuous journey for us.
So in that case, could you give us a size of the total addressable market here, and what proportion of that is Marico, aspiring to garner?
Still very small, and I think there's enough opportunity to grow. Having said that, I believe what is happening is that consumers are increasingly choosing healthier eating options. If you look at the kind of consumption occasions, one is of course breakfast, one is the main meal, which is which of course people still prefer home cooked meals. Of course, there's a huge kind of a proclivity to order food, given today it's far more accessible and available. But there are also in between meals occasions, which are snacking occasions. And what we intend to do through our offerings is ensuring a share of wallet in that occasion. Because I think people, while they want to indulge, they also want to have better for you foods. And of course, if you really look at India today, the packaged food industry, there are two vectors of growth. One is unbranded to branded. Branded is far better in terms of quality, in terms of hygiene. And the second one is, of course, having food which are better for you. And the runway for growth is tremendous. And I think the packaged food industry, with also all the government incentives that are coming in, I believe this is one area in the consumer goods space which has tremendous legs for growth in the years to come.
All right. Speaking about the consumer space itself, in the very near future, we are expecting, GST rate rationalizations to come through, as the Prime Minister was speaking about it. For your business, what do you think could be the benefits immediately? Would you be, looking at, seeing an increased volume because of the price benefits that you will have to pass on to the consumers?
I think one of the things is the rate rationalization is something which I think is a tremendous opportunity to drive consumption, and it is happening not only in consumer goods, it's expected in things like auto and durables, which will definitely catalyze. It's a very, very bold move by the government and the entire simplification and rationalization. It will definitely catalyze consumption in the country. As I said, that in India, a lot of categories have low penetration, and affordability and availability are the two drivers of growth. And obviously, each one of us will pass it down and across industries so that to fill up consumption. This is a right time actually to drive consumption in this country. And this is coming on the back of some of the tax savings which have been given by the government. So I think the combination of this is that a multiplier effect will be very good.
All right. We last spoke after your first quarter numbers. A little more than a month has passed since then. In that month, is there anything particular that has changed or anything that has happened for you to call out when it comes to input prices, when it comes to volume offtake, when it comes to the near-term outlook?
I think there has been a marginal drop in input costs which will obviously then benefit as we move towards the second half of the year. This is something we were expecting. I think consumption and the entire continues to remain steady. We expect a gradual improvement in consumption to happen in the second half of the year.
So a couple of quarters of double-digit revenue growth, double-digit volume growth you had called out for earlier. You still hold on to that, right?
So what we said, we will aspire to touch double digit in a couple of quarters, and something which we will still aspire to, yes.
And not happening in the second quarter for sure.
I think it's, as I said, it's too premature to give anything. But as I said, that we have experienced sequential uptick, and today we have moved to a stage where we have delivered now high single-digit growth. And somewhere during the next couple of quarters, it will be good to touch double digits.
And the margin pressure is waning. You said that there has been incremental decline in raw material prices, so we can expect margins to normalize soon.
So there is as I said, that there is a marginal decrease in input costs. It will take some time, obviously, and we will see how it pans out in the second half of the year.
All right, and your trigger will also be the operational improvement of some of your diversified portfolio, your new age businesses. Case in point, something like Plix, True Elements, and all of them, as they scale, they will start to contribute operationally as well. If you could give us a sense on the operational breakthrough for all these companies, the operational break-even that is, and are you looking at any more acquisitions after the ones that you've made already?
Plix and Beardo has broken even, and Beardo is on the around double-digit EBITDA. And this part of the business, we will drive aggressive growth and continue to ensure that they will help in achieving our aspiration of delivering a 10% EBITDA for this digital part of the business over the next 2 years. The other two, True Elements and Just Herbs, we have a slight burn, which we are aggressively driving break even over the next 18 months to 24 months.
All right, and any acquisitions? Because Zydus Wellness just made an overseas acquisition in the nutraceutical space itself, in the vitamins, minerals, and supplements space. Are you looking at the VMS space, as they call it? Any domestic or international acquisitions on the anvil?
I think we believe that our entire strategy in terms of acquiring some of the digital brands and filling up some of the adjacent spaces will continue. And as and when an opportunity arises, which is a strategic fit, which has the right valuation, we would be certainly exploring it.
All right, always on the lookout for some acquisitions, says Marico. There has been improvement in consumer sentiment, with GST being the next big trigger. The stock at the high point.